Hi guys, this is an S&P technical analysis update for Tuesday, 5th of April 2022. Before we start, if you want to join the masterclass, which is the educational program designed for anyone to analyze, trade and invest in the stock market, you can have a look at this 48 laws of power here. We do have a condensed version here for options and futures, as well as a mini version, but the full version is your first tab. Second tab is the secret Facebook group, where we have a look at all kinds of assets Mondays and Thursdays. Usually the video is between 45 minutes to 1 hour long, and it's usually released at some point during the early hours of Eastern time. Now, let's go into the S&P. So, for the last couple of weeks, we have been very bullish on what's going on here. More than likely, everything truncated here, and this is now indeed a 4. We did speak about on the last YouTube video, either this was a 4, then one more top, or this was the actual top. Clearly, the way it's moved up out of here, we finally got the gamma squeeze, and if we have a look at some positioning indicators, helps us to confirm this is indeed the low. So this essentially started off as a short squeeze, now it's developing into a full trend. More than likely it's something like an A, a B, then a C into here. We're now running the count that this is the 1, this is the 2. Here we're probably making some degree of wave 4, then essentially we're going to make a wave 5 here, which gets us to all-time new highs. That will essentially be the wave 5 of the larger wave wave 1. So this would then be a larger wave 1, 2, 3, 4, 5. So looks as though the panic is over here, so let's put that on a larger degree. Let's make that something like this. That gets you a top, we believe, sometime after the US midterms. It would be unwise for them to top this before then. If you have a look at the time of this presumed wave 5 relative to this wave 1, there is an argument to suggest a top maybe in late summer, August, September. The other sort of argument is that it goes more gradual. Once it makes all-time new highs, it starts to sort of peter out and do more of this rather than a full-blown parabolic 1999 blow off top. That gets you a top more like February and March 2023. That will then be the wave 5 in, and then clearly there is the potential for a very large correction, more than likely precipitated by what's going on in the US bond market. On the last video we discussed the inversion of the yield curve, which is basically the 10s, well, the 2 minus the 10-year spread. So if we have a look here, clearly we have gone to inversion here, and it depends how you want to do it. That is clearly inverted now. So what this means is banks are essentially inverting what they are doing. Probably the easier way to show this is to do it the other way around. So there's no longer any point being short this spread effectively, where you're simultaneously long the 2 and short the 10. That's probably an easier way to show it. Every time we have inverted, there is a lag between the point of inversion and the time and the percentage move to the SPX peak. Once again, we're dealing with the benchmark here, which is the S&P500. In my research, is something along the lines of 13 months on average from the point of inversion. So it inverted last week. That basically, once again, corresponds with the SPX count that we're going to top now after the US midterms, potentially March. And the percentage rise from that point onwards is around 22%. Banks are now inverting what they are doing. Usually they would borrow on the short end, lend out on the long end. You borrow at 2%, lend at 4%, you make 2%. That's how they make their money. Banks are now inverting what they are doing because the curve is now like this. They're now borrowing on the long end, lending out on the short end. This then takes us into the last stage of this Minsky cycle, this Ponzi stage, where banks are now doing shorter term, higher interest, more speculative lending, which is why we're seeing, crypto getting a bid, altcoins getting a bid, GME, AMC. We're getting pockets of exuberance here, and retail and institutional flow now coming in, much like it did back in March 2020. That speculation will drive, we think, the final SPX top. Now, if we take a look at a few things here, sentiment indicator, once again, we cover all of this twice a week. I mean, this was from last week, so 0% allocation to equities. What that means is there's plenty of cash on the side here, retail and institutional cash, to jump back in and FOMO back in to this stock market. American Association of Individual Investors bears readings, 4-week moving average. Basically, whenever the bear reading has reached a significant peak, usually that marks a low, as you can see here, here, and here. Basically implies there was a good washout. We've already shown this one. This is leveraged institutional investors, right, who have completely left this market. Okay, they're all the way to the left-hand side of your screen. Usually, when we get a proper peak, everyone is all in, and of course then the music stops playing, and if you don't find a chair, well then, you know, probably not going to fare so well. So as of this moment, it appears too much has been moved to a cash position, and there's plenty of institutional money which can re-enter this market, basically. And obviously it takes time to re-enter this market. Likely they'll all be in by the time the SPX makes new highs, and they'll be in for that final blow off top move to somewhere between 5,500 and 5,700. And if we just bring in some statistics here for the inversion of the yield curve, and here we go. These are the last sort of 5 or 6 inversions here going back to Feb 80. Obviously, I can go further back in time there. I mean, the yield curve has inverted probably more than 10 times in the last 100 years. But as you can see, there is a lag. And, you know, from the point of inversion here, 10s and 2s, we're not looking at 10s and 3s. Even though they've technically inverted 2 last week, we're looking at 10s and 2s. There is a bit of a lag, somewhere between 13 to 18 months. And the SPX can still make 22%. So let's just have a look and see if 22% lines up with the point of inversion. The point of inversion was basically here, the 1st of April. So let's add 22% to the 1st of April. That was basically here. So let's add 22%. See, does that line up with 5,500 to 5,700? Well, there you go. So everything, you know, tends to happen for a reason, and you know, tends to make sense most of the time in the stock market, you would hope. That basically gets us to our target of 5,500. Like I said, if the statistical analysis is anything to go by, let me do that again on the log chart. Make sure we get the same percentage there, just in case it yeah, it's a little bit about the same, isn't it? So based on statistical analysis of the yield curve, the top should be around 5,500, which lines up with everything else. Now, the Nasdaq, very much a cause for concern. You look at things like, you know, Peloton. You know, that is a 1,000-year top there on Peloton. You're probably never going to see that again. I do see a situation much like 1999 where a lot of these SPACs eventually are going to go to zero, but as you can see, this sort of irrational exuberance is now re-entering this market like it did back in March 2020 and sort of a little bit here as well. So we're getting a whole bunch of retail traders who are now re-entering this market. You know, Nikola, you know, a lot of these probably eventually go to zero, but they'll probably be in a much of a bid to manipulate the index higher. PayPal, I mean, to me, that's a 5-year top up there. But, you know, you could still get a nice move into here. You could still get a nice move into here. You know, that's probably all an A, probably a B, and then eventually, you know, PayPal makes its move down. Facebook, you know, we're trying to get back into this gap. So there's no doubt we're getting a nice little bid here. I think the high for Facebook is in for this, you know, for this cycle. To me, that looks more like a probable A wave, but there's no doubt there's been some nice moves there, and we have been tracking all of these moves, including the crypto moves, twice a week, which is really why we have to do these videos twice a week, because the market is so fast. So we can't just, you know, cover it once a week. We have to keep an eye on it. Mondays and Thursdays usually the best time to make a video, because that's, you know, usually when you get the move. Clearly, first target is going to be here. Obviously, we do have earnings, so very much a buy the rumor, sell the news. We could easily end up trying to approach this gap. Likely there will be some resistance at 247. So yeah, Nasdaq, I do have my concerns, but if the Nasdaq was to follow, then clearly we're then going to go up to make this new high. So I made a video on my old YouTube channel, which is still here, 20,000. Once again, this was looking pretty dicey, and there's no doubt whatsoever you can count 5 waves up. So the concern was primarily the Nasdaq. You know, we don't like to see wave 4s retrace more than 50%. That is one hell of a retracement. Notice though, just for that move, the algo target is right here. So if we say Nasdaq has also made a wave 4, that means that was the 1, 2, 3, 4, 5. So there's also a wave 5 potentially going on the Nasdaq. How will we be more sure if the Nasdaq is indeed going to be in a wave 5 and not has already topped and is in a bear market? Basically, I would say above the low of this hammer at 14,860. If the Nasdaq can consolidate above this level, you would have to say it's probably going to go all the way and make all-time new highs. If it bounces off here, then rejects as resistance, clearly in a long-term consolidation, then we go down, or we bounce, retest, then go higher. The way the S&P is moving, given how much cash is on the sideline and the general positioning here, and the gamma squeeze which is clearly taking place, and the inversion of the yield curve, it appears SPX definitely going to make a new high, and there is a suggestion that the composite will also follow. But like I said, Nasdaq, you know, two interpretations there. 15,000 probably going to be the area to at least sort of a make or break area. If that indeed is the 5, then clearly that's the 5 in 19,000 on the Nasdaq, which then once again, when we zoom out, we believe the Nasdaq will then go into a wave 4 correction. So bit more doubt on the Nasdaq, but there's no doubt a speculative kind of move. Nikola, Spice One, Roku, Peloton getting oversold bounces. They could easily manipulate this Nasdaq higher. Now, which is the only stock which we believe can take part in a retail institution-led FOMO 1999-esque move? It's probably Tesla. Now, for the longest time, I've always thought in the back of my mind this could do a Yahoo. Yahoo was for one day, well maybe a week, back in 99 or 2000, more to the point, the most valuable company in the world before crashing, 100% basically. I mean, it's no longer even on the stock market, 90% over the next 10 years. I've always had this feeling that Nvidia was copying Qualcomm from 99 and Tesla was copying Yahoo. The count is a bit messy on Tesla, but if you believe that we are in a blow off top, which definitely we're in on the S&P, and you say something like that was the 3, that was the 4, is there the potential that Tesla, even from these levels, can double? This remains to be seen. I think Tesla almost certainly will make all-time new highs, and I've always believed if the stock market was to have a flying and blow off top, the target would be 2445. Now I can't explain why this is the target. Those who can decipher numbers very, very well and are part of the group know exactly why I think that is the target. If this does happen, Tesla hits 2.5 grand, basically doubles from here, and Apple and Microsoft fall off a little bit away from 3 trillion, there is a chance, almost certainly, number one, that gets the composite, the Nasdaq, to 19,000. There is a chance Tesla could become the most valuable company in the world for a couple of days at least, and then it has its big dump. If this is indeed the count, if this is not a genuine impulse, that's some kind of 3, some kind of 4, some kind of 5, then clearly all we're going to do here is probably make a new high. So the key level here on Tesla is all-time new highs. What kind of reaction do we get here? Is it just going to fail up here, like Bitcoin failed at an all-time new high, and then fall back down again, in which case it's very obvious, sure, the key level is here, or is it going to retest as support, and then are we in a blue sky breakout, to quote Dan the man from the charting guys? I've not watched their YouTube videos in a couple of years, but what a legend he is. Is it a retest, blue sky breakout? By that he means, and I mean, price discovery. That gets you still a double. So Tesla is clearly the highest risk. It's up 20% from the lows. But is Tesla doing a Yahoo? For some reason, in the back of my mind, I've always felt the one stock that was going to do this was going to be Tesla. Because let's be honest, Amazon is maxed out here. It's just gone sideways. There's been zero return on investment. That might very well make a new high, but it's effectively gone sideways. Apple is in a large rising wedge. Also, there is a possibility, almost certainly will make a new high there. Microsoft. Basically, can any of these stocks that I'm looking at right now double from these current levels? The answer is no. Tesla is the only one that can double. So to me, Tesla is the most interesting, and that's very much a hunch. If it does do what I think it's going to do, the reaction at the all-time new highs is the most important. So I think we can wrap it up there. If you guys want to join the group, you know what to do. If you want to message me, you can go through on Facebook, and quite a few of you have mentioned this amortization calculator, which really has got nothing to do with the stock market as such. It's something which I devised about 3 years ago, and I posted it on the Facebook page, and it's really interesting. Some of the fancy things you can do, understanding how interest rate works and everything else. I will be uploading this to Teachables as a separate course altogether. So it's got nothing to do with anything that we do here in the stock market, but watch out for that on a separate tab. There's been quite a few messages that I've received on Facebook recently asking for this spreadsheet. I'll do a full hour-length video to explain everything and how exactly you can use it to your benefit. It works with anything really. Any amortized loan that's where the rate of interest is charged on amortization and not a standard rate of interest, it can be used. That includes car finance and everything else. So I will be uploading that onto Teachables as a separate module, and you guys can have a look at that. Once again, that's completely separate to what I do in terms of the group and the masterclass, but I know quite a few of you have wanted this for over 3 or 4 years, and I'm finally going to make that available. Anyway, I'm going to wrap it up there. If you like what we're doing here, please like, share, and subscribe. Hopefully we'll get to do some more YouTube videos up pretty soon, including some educational ones, and I'll chat to you guys soon.